Hello again, everybody. It's Harry Boxer, the technical trader. It's Tuesday, February 23rd. These are the charts of the day. Today I'm going to focus on the short side, on the Boxer shorts list, on some of the select stocks that we have on that list, give you an idea what's shaping up out there, especially with today's steep drop in the market. Looking at Amazon, a top may have formed between November and January. Stock broke at the end of January. In the last 2.5 weeks, you can see the stock's been meandering sideways in kind of a coil or bear flag below the declining tops line inside the channel. Now the channel bottom says around 107. There is a gap at 110, but the immediate target is around the 110 and then 107 area, then followed by, if the gap is filled, all the way down to the high 90s. ASMI rolled over in December and January as well. Came down hard between mid-January and early February, dropping from 26 down to 20.5, bounced, formed a little bit of a bear wedge here, right near the declining top line of moving average resistance. Next target down around the 19 range, 19.5 at this lateral price support. And if that continues lower, we could see something around 17. Secondary target. C.H. Robertson topped out and broke key support around the 54.5 range early February, bounced around, moved back up to declining tops line and lateral price resistance. Technicals look terrible. This stock could roll over at any point and get a hit down towards the $50 range. Secondary target in the high 40s. Well, let's call it 49 my initial target. Secondary target about 43. ECL, Ecolab, which had rolled over the last couple of days. As you can see, the bounce back after the breakdown. The bounce came on rather poor technicals, and then the rollover is retesting the low here. But right now we're in the confines of a declining channel right here. Perhaps something like that may be forthcoming, which means a drop down to around 39 short term, 39.5, and then beneath that we're looking at about 35.75, 35.5, 36. EWP, the Spain country ETF, has been in a very negative trajectory, dropping from 52.5 all the way down to the high 30s over the course of the last 3 months. Over the course of the last 2 weeks, a bear wedge formed. Today broke out to the downside, dropping $1.24. It looks like at this point it's heading down towards the mid 30s, maybe even as low as 32, my secondary target. Greif Brothers, GEF, also broke a kind of a head and shoulders topping formation, broke down, has worked its way slowly back up to the declining top line and moving averages, and with technicals being rather flat to negative, this one should roll over, take out 46, 46.5 support and get down towards the $40 level, my secondary trading target. Google, along with Amazon and Goldman Sachs, market leaders exhibiting very little response to the recent market rallies. Notice the wall at around the 549 area. Today's action down 773, a reversal of about 11 points from its high. It looks like it may be headed for a breakdown. Looking at the chart pattern, you'll see that the bottom of the channel looks like around the 490.92 zone. That's my next trading target, about a 45, 50 point move potentially. Call it 40, 45 points down on Google may be coming up. Goldman Sachs, similarly, has broken the head and shoulders type top, came down hard in January, and all it could do since then was form a bear coil. Today's reached up to the declining tops line and moving average, lateral price resistance, and then collapsed 5 points to close down a penny on the day. Inverness Medical Technologies breaking down as well, broke out of the wedge to the downside a week ago, and it's now rolling over. It looks like it could collapse. Trading targets on IMA are 37, 33, and then 30. New Market, which really got slammed at the end of January, rolling over from 125 down to 80, then bounced in a slow rising bear flag. Today dropping 253 and may have begun to fall out of that bear flag to at least test the lows around 79. Secondary target 73, and then a longer term target in the mid 60s potentially. Perfect World, PWRD, is forming a beautiful sideways bear consolidation, bear flag after it broke the Head and Shoulders top over here and couldn't even get back to the neckline. Technicals are barely moving. I expect a breakdown that takes us down to 33, and then beneath that, something around 26. And last day is Ralph Lauren, current portfolio position, which broke down hard early February and has been bouncing up slowly in a rising coil or rising wedge or bear wedge. Resistance right at this gap in this previous price resistance, as well as the declining tops line. Today it dropped to $1.09. Could be the beginning of a new decline. You could take it sharply lower, looking for about 10 points down on Ralph Lauren. There's some ideas for you on the short side for the coming days should the market extend its decline.